Hi friends, so we'll start today's analysis. Today was a day where we had the Sensex weekly expiry, and we could have expected some great fireworks today, but it was pretty in a small range, I would say around 200 to 250 points range. We again defended 22,800, I think fifth time in a row now. The low was around 22,800. We touched in the intraday, and we were closing around just 14 points down, so around 22,940, 950 odd levels. But we have been hitting those levels of 22,800 again and again. Now, and we are not able to close higher. So the problem is that yesterday also we made lower high and lower lows. Today, in fact, we didn't make the lower lows, but we didn't make lower higher highs. So, and we are not able to close above the 20-day exponential moving average, which is placed somewhere around now 23, 150 odd levels. Which means market is trying to consolidate, market is trying to form a bottom, but it is very resistant to uh, go forwards as well, which can ultimately lead to two things. So, see, what we have been doing good as of now is that we have been defending those levels on all the bad news, I would say. So, for example, today also Trump has announced, yesterday he announced that I'll be putting those tariffs, reciprocal tariffs very soon now. Probably on 2nd April, I'll put those tariffs. And probably on 18th, let's say tomorrow or today night or let's say tomorrow, probably announce some tariffs on oil and gas as well. So that kind of a tariff war is continuously moving, which has now led to again the rise of dollar index. It is now touching around 108.9 levels. Rupee also was around 910 paisa, slightly weaker in terms of dollar index going up. Bond yields have been pretty steady. They're not going up, but they're not going down as well. So this kind of tariff announcement was there, which reacted, and again we were the only markets who reacted sharply on it. Other markets didn't react anything sharp on it. So the market which are weak, they remain weak, and that is how the bear cartel becomes very heavy. And anyways, we know that there are around 1,90,000 contracts short in the system, and almost all the shorts are from FIIs only. And whenever they will keep on getting these kind of news, they will take the market lower and try to capitalize on those shorts. These shorts can only get squeezed now when we get a real good news now from these levels. So like so for example, last time we had budget lined up, we had RBI policy lined up, which gave us 100, which gave us 1,000 point rally. So we now require that kind of a trigger which can take the market forwards. Otherwise, we are still lingering around these levels. We're not finding any trigger to move up. So that was one thing from Trump, which actually kept at least our market nervous. Although the Dow futures and Dow were trading in green only. Let's see how the session pans out for them today. But I don't think because any increase of tariffs from here on, it at least it's not negative for US markets. And anyways, today Nikkei market was 1% up. Even Shanghai and other markets were doing good, which means only we are reacting, which actually also means that we probably may not be reacting too much on the tariffs. It's probably internal problem that we have into a system, lack of buying, probably the froth which was generated for last 1 or 2 years, which is now coming out. There is a hesitant in buying in good quantities. The buyers have suddenly vanished away. So we are actually struggling with our internal problems. Had this market been on a 6 months before kind of a market, we would have rallied by now. Two good announcements in budget and in RBI policy, we could have rallied at least 2,000 points from here on. But this is not that kind of a market. And anyways, the seller is very heavy on our markets as of now. So that was one news which came. Another news which came, which I thought was interesting to share, was that the cargo traffic has gone up by 11%. So these are some indicators which is telling you the strength of the economy, how the economy is moving forward. So it's giving you 11% rise. We also saw the passenger traffic in terms of airline traffic. It also went up by 11%. This came from GMR. So probably that is also good news that we are moving around 10-11% kind of a growth. See, anyways, we expect around 10-11% kind of a nominal GDP growth in our system. I think our finance minister also projected a nominal GDP growth of around 10.5% for FY26. And this is how probably even if we're growing at those levels, the market should actually react with those levels. So if you are growing at 10% nominal GDP rate, and if your stock markets are priced at 120% of your GDP, which means that you should be around 12% kind of a gain from here on. That is what the expectation on Nifty should be for the entire year. You may have ups and downs, but ultimately you should end up somewhere in the year at those levels of around 12%. So we started our year, let's say around 23, 300 kind of levels, and 10% from there. So we should be touching somewhere around 25,500 to 26,000, that kind of a range, somewhere in the year. Whether it comes to second half, first half, we have to see, wait and see. But that's the kind of level we should be looking for in terms of returns. This is again the level which today I think Morgan Stanley and Citibank, they also told that the market is now very oversold, and market is probably not reacting to some of the good news which is already came in. And I think Citi has given a target 26,000 for Nifty for the entire year, and Morgan Stanley is also in the same kind of range, around 25, 800 or 26,000 range. And if we see the fundamentals also, it is, we are reaching to that point. So if you have a 1 year view, why I'm giving all these figures, that if you have a 1 year view, probably these are the levels to buy, which I've been telling anyways in all my videos, that this is probably the level which you start buying in a staggered manner. And probably if you want to have now lump sum kind of a investment also, I think the time has come. See, we would have liked anyways to close green today. We would have liked the shorts to cover up drastically. Did not happen, which means that yes, we might have one more capitulation. We might again touch 22,700 again, but I don't think the market will remain there for a long time. See, the amount of time we are spending at 23,000, you believe it or not, 5 months we have spent now on 23,000. I tell you why. The October low was 23 to 350, November low was 23 to 50. Then again we touched somewhere in December 22,800. Then again in February we touched around 22,700. So we have been in that kind of 2% range for now 5 months, right? So anyways, we have given a lot of respect to these levels in a drastic way. And if we are able to defend those levels, and if we're not actually wanting to go down, then I think probably this is some kind of a bottom formation. And anyways, if the market goes down to 22, let's say 500, many people are saying, it will not be there for long period of time. It will be just for 3-4 days, and we'll again bounce back from there. Because now we are seeing some kind of a buying at these levels. Although it's still not aggressive buying, which we really want for the markets to take forward, and that is why we require one trigger. Now, the trigger can come from anywhere. It can be a good corporate news, it can be a good government policy making, etc., which already been done, but still out of the box if something comes, or probably we see some good numbers on GDP growth. I think that will fuel, or that will add a lot of confidence to the foreign investors, and we'll start seeing those kind of movements into our prices once again upwards, because everybody knows that a lot of froth has been taken away and people are sitting on cash. So the people who were sitting on the sidelines for a long point of time, they have not participated from post-election rally, or let's say last July to August kind of a rally, and they're sitting on cash. These are the levels they will start entering. And anyways, our retail investors are still pumping in money in terms of mutual funds to fuel our stock markets anyway. One more news came, which came from Tesla today, that job openings were there, and we already discussed in our previous videos also that now it's a given that you will see Tesla cars into India. But the good thing would be if Tesla manufactures its cars here. See, if that happens, that would be a good boost. Yes, it will be a temporary, disarrangement to our own automakers, but then in the long run, this will be a great thing, because if Tesla becomes export hub, which it can, considering the price advantage that they get and policy support, and the kind of ease of doing business now which Mr. Modi has done over past 14-15 years, it makes Indian environment good enough to do that kind of manufacturing. It will happen or not, we have to wait and see. But Tesla cars coming into India is a given now. So this was again one more thing. Then probably Starlink will also come to India. These are all both the things from Mr. Tesla person. So probably these two things are a given now. I think Elon Musk will have persuaded Mr. Modi in his meeting, and that's a given now. But again, coming back to the Indian markets. So what my analysis or what my thinking here goes is that this is the level where we are seeing a lot of consolidation. We are seeing a lot of covering up some shorts also. Yesterday also in the F&O, FIs have covered their shorts. And in fact, they have taken long positions also in index yesterday. So they were buying in index also yesterday, and they were buyers in stock futures also yesterday. Stock futures, anyways, they're buying from last 4 days, and this is the gradual transformation. This is the way the market turns when they have fallen a lot. uh, suddenly start seeing some F&O movement for FIs, and then they start buying in cash. Once they start buying in cash, that will be a moment to actually get in the market if you want to have aggressive positions. As of now, you can have some positions, whatever is your risk appetite, but this is not the level to shy away from the market. This is the level to enter into the market, to remain invested. And if you have not sold your shares as of now, then hold on to your stocks. This is not the time to sell. We are very near to a bottom. See, exact bottom nobody can predict. I can only say my analysis. We all can just preempt some of the things, but actual bottom is not known to anybody. And I'm saying this with a lot of security now. Even if the market breaks the lows of February, which is 22,700 kind of odd levels, we will not stay there for long. We will see a rebound very fast. The kind of commentary we are seeing from Morgan Stanley, the kind of commentary we are seeing from Citibank, the kind of upgrade which are coming from the bigger stocks, and the kind of futures buying that is happening now in F&O segment by FIs, the selling is happening only by thin volumes. All this is giving us confidence that the market should at least move higher from here onwards. Probably not in this series because I don't think FIs will give any exit to anybody. Whoever's are long, they will try to kill them, and they will end the market in probably these levels. Let's say 200, 300 points plus minus here and there, but they will not give any prices for exit like the market goes to 24,000, 23,800, 24,000 above. This is difficult. Anything is not, anything is, it's very difficult to say that nothing is impossible in stock market, but considering the nature of FIs, how they operate, I don't think they will give a lot of exit to the players who have already taken the long positions, bigger HNIs, some of the mutual funds, etc., etc. What exactly do we want to gain more surety that the bottom is done? So we want two things, in fact, three things. We want to close higher and higher for consecutive 2 to 3 days, and we want to close on day highs. That is one indication. Second is we want to have some cash buying aggressive from FIs. That is second trigger we're looking for. Third trigger which we're looking for is if the shorts are going down, but the longs also start adding up. See, the long short position is still less than 20%. We want that position to at least touch 40%, 50%, 60%. And the rollover for next season, next series should happen in long positions also. That is what we actually want. I mean, it will happen or not, I don't know. And one more thing which we actually want is when all the global markets are down and India is up. Up means we should close at day high. So for example, we have a bad session in US, we open gap down next day, and we recover our losses and we close at day high. So global markets are weak, but Indian markets start closing on day high. That will be the biggest trigger that the money shift is now happening towards India. See, as of now, what is happening is the money shift is towards China and US. At least that's what the number is saying. I'm not sure, those figures don't come out, but as I was telling yesterday also that $1.3 trillion of money has gone into Chinese markets. And people are seeing some value in terms of deploying some money to China as well. And I'm not saying that that has to happen at the expense of India. But this is what is happening, and around 750 or let's say $800 billion of money has gone out of India in this particular calendar year. So, if at all we see that one event happens where we open very low, all the global markets are down and India is up. See, as of now, what is happening is all the global markets are in green. Almost last 3 months, they all have been stable. Yesterday, again, European markets closed at all-time high. Nikkei is still trading around 40,000 kind of levels. Shanghai is still closing in green. US markets are very close to their all-time highs. So all the other markets, world markets are doing it. India is doing bad. We are down 13%, 14% from our peaks. And we already saw, more than $1 trillion of money has been wiped out from our stock markets, which is huge. 20%, 22% money has been wiped out from our stock markets. That is huge correction, which means the money has flown away from India. It has gone somewhere. We actually want one event to happen where the global markets are down and India is up. That will be again a confirmation that yes, the bottom has been made. And then we're looking very, very sharply towards the WC recovery, which we spoke yesterday. We'll see where exactly WC recovery ends, how it goes down, and again what the levels it can go up. Those all things are, anyways, we'll predict as the time comes. But as of now, even today's market situation, I would not say it is bad. Uh, some kind of negative news which came from Trump, it gave a chance for the bear cartels to again capitalize on the market. They capitalized also, but then again we recovered. And the way they were buying in mid cap and small caps and even in large caps, probably HDFC Bank, Reliance, those big stocks. These are stocks which actually interest more to FIIs a lot, which means there is a gradual buying as well. There are signs of gradual buying as well, which is only giving us a sign that the bottom is in place. The bottom is in place. How much higher will go? Anyways, we'll see further as the market moves up or down from here. So today, let's watch the US markets. They will open after a holiday and probably three consecutive days holiday, the Saturday, Sunday, and Monday. So let's see how it reacts and how it reacts to Trump, remarks on the tariffs and all. I don't think there'll be a great remarks. Anyway, the futures are still trading in green. Let's see how the announcement goes and how we react tomorrow again. So we'll watch the US markets. This is what was there from the Indian markets today. In a nutshell, I would say my again the view is we are very, very, very close to the bottom. I don't know the exact levels where it will be, but this is the time to invest. We should not shy away from investments now. If you have spare money and if you have a horizon for even for 1 year from now, probably this is a time to invest. You can easily beat any kind of other benchmark index or any kind of investment metrics which you follow. It's very, very easy to beat from these kind of levels. It's really a time to invest. This is not a time to actually be scared and go away. That will be my analysis for today. Thank you so much for watching. Thanks.